Friends, Bitcoin went back to 72,000, just as the market immediately took on a lot of negative factors, bringing the price back to 69,000. In my opinion, this all looks like one big trap or manipulation to get you to sell. I will now tell you how BlackRock, JPMorgan, and the rest are dumping the market. Why is this being done and what will happen next? Subscribe to the channel and let's get to the bottom of this. When I saw the first news that tried to cause confusion, I thought, why now? Look, Deutsche Bank conducted a survey among their clients, and it was found that 30% expected Bitcoin to fall below 20,000 at the end of the year, and only 10% of those surveyed believe that the first cryptocurrency will rise above $75,000 by the end of 2024. Do you think they conducted the survey right now, or was it just waiting for its time to cool down the market? And here's a forecast from BlackRock from earlier in the week. They note the S&P 500's 1% rise in the previous trading period, as well as the high rates on 10-year Treasury bonds at 4.4%, and the decline in U.S. unemployment, altogether suggesting that investors' expectations of a Fed rate cut this summer may not materialize, as the regulator will be forced to take a tougher stance. Moreover, they directly say that if inflation falls now, it may still return next year, and the Fed will have to do something again. This is quite shocking news for investors in the stock and cryptocurrency markets who are waiting for a rate cut and the subsequent launch of the printing press to make their assets rise to the max. And this story was extremely timely and successfully fueled by JPMorgan CEO Jamie Dimon. In his understanding, the difficult geopolitical situation creates the necessary conditions for a new round of inflation growth, and as a result, the Fed will not lower the rate this summer and will postpone the transition for a long time. And let's discuss the cryptocurrency market. There are many factors that point to a planned manipulation to create negativity. For example, yesterday Bitcoin fell at 68,500 after the news that Grayscale sent another 6,200 Bitcoins to the crypto exchange Coinbase, which equals $420 million. And now we open the ETF trading chart for yesterday and see that sales from GBTC amounted to only 154 million, where another 260 million is missing. Where did it go? Left for the next day? I've been closely following the trading stats of spot Bitcoin ETFs lately and observed many oddities. How do inflows and outflows rise and fall sharply in different funds? It seems that we're being shaped by the right circumstances to manipulate the mood on the spot market and keep the price at the level needed by BlackRock and their colleagues from Wall Street. And in this case, they're also actively assisted by the media. Not in vain. Just yesterday, Bloomberg reported that the U.S. Treasury Department is sharply interested in the issue of imposing secondary sanctions against cryptocurrency exchanges for the reason that they're used in schemes to finance illegal activities and circumvent sanctions and even crypto 100%. Arthur Hayes published a new article in which he predicts a sharp drop in Bitcoin before and after halving, but he reassures that all the worst will be over after May 1st and the market will become bullish again. What is the purpose of this manipulation, and what will the price actually be at halving and beyond? I'll tell you in the next part. And you subscribe to the channel to get only verified information and not to fall into the traps of the market. BlackRock already has 266,000 Bitcoins on their balance sheet. That's $18 billion, and they certainly don't need to crash the market. But keeping it at the same level to accumulate as much as possible at a low price makes sense, because we have a lot of events ahead of us that will give a strong bullish momentum to the whole market, and traders can already start putting them into the price, moving the rate to $75,000 or even $80,000. Look at a simple example. Yesterday, shares of Japanese investment company Planet soared 90% in one day, after it became known that they bought Bitcoins as an investment asset, and they bought it for a small $6.5 million. But what a result! They're already said to be a competitor of MicroStrategy, and soon the U.S. reporting season will start, and imagine what will happen in the market if it turns out that big companies and billionaires are buying Bitcoin ETF. Another important factor is Hong Kong, through which the Chinese may again have access to the legal purchase of cryptocurrencies. Today it became known that the first spot ETF on Bitcoin in Hong Kong may be approved as early as April 15th, and then it'll take another 2 weeks to launch trading. And BlackRock is actively following this, because last fall Larry Fink had dinner with Xi Jinping when he visited the United States. And also right now Vitalik Buterin is in Hong Kong, where he's officially presenting the Ethereum ecosystem. And unofficially, he may well check the issue for ETF on Ethereum in Hong Kong, because as the media say, in the US there is almost no chance, and in May they will not accept anything. And of course, halving Bitcoin, which is less than 10 days away, it'll definitely be abnormal because it is the first time in history when the maximum was updated before halving. And also, according to this study, The demand for the first cryptocurrency always grew after the event because the emission decreased by half. But on the chart, we see the demand of whales is already at the maximum level for all time. Such a factor could send the price to significantly higher levels, but only for now. It is not necessary for BlackRock and the company. Considering what's happening around the crypto market now, and if we put the adoption of Bitcoin ETF and halving on the same level, the forecast of analyst Benjamin Cohen looks good. He expects high-quality volatility with the possibility of breaking through $75,000 and then a sharp correction below $60,000 immediately after the halving. This is not financial advice, and the market is not obligated to repeat anything, but often similar events show similar results. And the most important thing in this forecast is that despite all the current and future negativity, the trend remains strong and is bullish, so do not give in to manipulations. And while you're waiting for the new Bitcoin high, you can subscribe and give this video a like. Thanks for watching.